Well, for more on how these rate cuts could impact Canadians' finances, let's bring in personal finance columnist Rubina Ahmed Haq. Rubina, thanks so much for making time for us.
Yeah, thanks for having me.
So the Bank of Canada out with a second rate cut. We still have their key lending rate at 4.5%, though. We know so much is based off of that when it comes to borrowing costs for Canadians. But just how big of an impact do you think it could have?
I mean, if you have a variable rate mortgage and you stayed the course, you haven't fixed your mortgage while interest rates were going higher, then you are going to get a little bit of a reprieve on your payment. So either you'll be paying less towards interest or your actual payment is going to come down depending on what type of variable rate product that you are in. And this is also good news for somebody who is in the market to renew their mortgage or to get into a new mortgage. They now have a little bit more wiggle room because banks will be willing to offer them an interest rate that's a little bit lower than they would have yesterday. And so that might give them a little bit of extra money to bid more or even use that money to renovate or do other things when they buy that home.
I'm glad you brought up mortgages. I mean, it's hard not to when you're talking interest rates, Rubina. But, for somebody who might need to renew their mortgage or maybe they're considering a new mortgage, buying a home or what have you, we know that just before the interest rate hike started to happen, there were a lot more people going into variable rate mortgages than fixed rate mortgages. They felt the pain most likely over the time that we've seen interest rates at these elevated levels. But now that interest rates are starting to go down, could you begin to consider maybe a variable rate mortgage might be, a possibility, a way to go?
So this is a very personal decision, and it all depends on your risk tolerance. Now, fixed rate mortgages have always been more popular in Canada, except for that time that you were talking about where variable rate mortgages were gaining more popularity because the rate was so low. You could get in, when the overnight rate was 0.25%. I mean, some people were getting rates less than 2%. So it was a very attractive rate to get into, and you could afford to get more, you could afford to renovate, maybe even buy some extra things for your home because the mortgage was that much easier to carry. A lot of people have in the last 2 or 3 years felt very burned by higher interest rates. And I believe that there is a cohort of people that will never go variable again because of what happened in the last 2.5 years. Just speaking to individuals, speaking to family and friends, they just do not want to ever put themselves in that vulnerable situation again. But history will tell you that going variable has saved Canadians money, but it is a personal choice, and it is something that you have to make with in mind that rates can go up as well.
I wonder, Paula, she threw to that prospective home buyer clip there in our conversation. That person was interested in getting into the housing market now that these rate cuts have happened. When you're looking at the affordability equation right now, Rubina, these 2 rate cuts, is it enough to make, the possibility of home ownership more affordable for some Canadians?
So rates have come down 50 basis points in the last 2 months. And if you look at the June data, it shows that home prices are actually down year over year. So the rate cut did not do what it normally does, which is push prices up. So it's not really the interest rate, because interest rates are still quite low in comparison to where they have been in years past. It's just that we haven't experienced these kind of rates for the last 20 years. But if you look back 40, 50 years, rates have been in the double digits. So it is still much more affordable now to borrow money than it was, say, 30 years ago. It's more home prices coming down that is going to make it actually affordable for Canadians to buy homes, especially in the more expensive cities like Toronto and Vancouver. Not necessarily a 50 basis point cut, because the June data shows that not really much happened in the real estate market. People didn't start getting excited again about buying homes. There wasn't much activity. Prices actually went down year over year. So it shows that affordability really lies in how much you're paying for that house, not necessarily how low that interest rate's going to go right now.
Yeah, it'll be interesting to watch the housing market in the next couple of months here, Rubina. Thank you so much for your time. Really appreciate it.
Yeah, thanks for having me.
That was personal finance columnist Rubina Ahmed Haq, and she joined us from Oakville, Ontario.